All right, what is up, traders? What's up, tycoons? We're going to talk about commodities today. All right, now there's a few reasons that we want to talk about them. Fund managers have been catching on to the fact that commodities have been strong. If you're a fan of the Discord or the channel, or you're on the newsletter, we've been catching on to this commodities trade. Hedge funds tend to follow the trend and not really spot trend reversals or new trends. So we are seeing, hedge funds pouring into commodities now. We'll take a look at a specific one, FCX. This is Freeport. Okay, there was some analyst buy ratings here. We'll take a look at commodities themselves via the DBC index. We'll take a look at a ratio chart of these commodities versus the S&P 500. And we'll take a look at some of the big commodity names like oil, setting up potentially for energy. Then we've got precious metals. This is the precious metals ETF right here. And one metal in particular, lithium. We'll take a look at this one. I saw a pretty interesting analysis from Bertinelli, and this was his analysis. I've kind of incorporated my own into it, and we'll just go ahead and take a look at that. And then we'll talk about why you really want to be paying attention to these. Maybe even if they're not something that you want to invest in or potentially trade. This is CPI and the commodities index. All right, we'll explain the relationship between them, and then we'll talk about financial conditions, okay? They're actually back to where they were before the Fed even started its entire rate hiking cycle, all right? So the stock market has gone up massively, made new all-time highs, and financial conditions are as loose as they were before the Fed even, raised us 500 basis points. So that's going to be the main stuff we're going to talk about in today's video. It's going to be a really good one. As always, the content provided on the channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through that disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys, giving out free, valuable finance and trading content. And I try to sprinkle in some free trade ideas in there as well. Throughout the month of March, we are talking a lot about commodities and talking a lot about energy. There is a website associated with the newsletter, so you can go back and check out some of the previous articles, check out some of the different trade ideas and just different topics and things, see if it's something that you're interested in. And you can also join the Discord. Okay, the Discord is going to be it's a $10 a month. That's where you get access to all my analysis, right? So if you like the YouTube videos and you want to know what I'm looking at, throughout the weeks and stay up to date and figure out, what plays I'm looking at. All right, that's going to be the best way to do it. You can access me directly in the Discord there as well, and see everything before it's out on YouTube. All right, now these are some of the different trade ideas that we had in the month of March. Going over Tilray, highlighting the 3-to-1 risk to reward ratio. It actually went much farther than our initial price targets here. So that was a really nice play. And then VLO, another energy play. This was posted in the Discord March 5th, dated March 5th, looking for the breakout from 140 up to the 160s. And we actually blew way past that all the way up here to the 180s on VLO. So that was a very, very nice trade. Sold some into strength, the last contract for there. Now let's get into the video, okay? And we talked about fund managers catching on to the fact that commodities have been strong. And so what you're looking at is a commodities allocation month over month change. So we're seeing that there's a very big boost on a month over month basis in commodities, right? And basically in the hedge funds exposure to commodities. And Freeport is one that a lot of institutions, a lot of analysts have really big eyes on, right? And this was one of the trade ideas that we had in there, looking for the breakout here, initially targeting this overhead supply and then the next overhead supply. We did crack through above it, getting up to about $52. And now I think you just, you can try and buy into the back test of support, right, in these areas here. But me, honestly, I'd rather just buy into strength and look for a breakout above 52. Above 52, you're going to be targeting 55.41. And above there, on a longer term time horizon, okay, because this is a large multi-year base right here, right? From 2021 up here to 2024, we still haven't broken out really, right? We had a little false breakout here and just cracked above that 51.96. But if we can get above there, and then, the short-term target is going to be 55.41. But above there, we're really looking at $69, right? That's going to be the next price target up above. So if you got a little bit of a longer time horizon, I think you can look to buy in above 52 on a breakout above 52, put a stop below maybe at 50, maybe 49, whatever your own risk tolerance is. And then just try to, ride the momentum and see if we can, get above 55 and come up towards that $69 price target. Now, this is DBC right here. This was a really, really nice trade. Um, And what we were initially looking at was, not only the base it was putting in here, but a little bit of a double bottom. And we considered this a neckline, right? And so we bought the initial breakout here, all right? Bought the initial breakout, and then we had a very clean retest of the double bottom neckline, right? And then what did we do? We just went straight up. We blasted through the first bullish price target of 23.16, and we came up and topped out right up here at 24 bucks, 24.10 for our next bullish price target. And this is when we took some profits on commodities. So we're starting to see a lot of things check back, not just big tech. We are seeing commodities pull back here as well. But I think that there's lots of opportunities potentially, in commodities for this next upcoming year. Now, this is a ratio chart of the SPY divided by the DBC. So when this goes up, it means that SPY is outperforming. When this goes down, it means that commodities are outperforming. And you can see that commodities have actually been outperforming the stock market here, for a few years, right? That's what this chart is telling you with the lines heading down. It means that the SPY is underperforming the DBC. And, we did have this recent uptrend here, right? We broke out of this downtrend, meaning that the SPY was outperforming. And, we've seen some pretty impressive performance in the stock market, right? But now what are we seeing? We're seeing this roll over, right? And it's rolling over underneath this 61.8% fib level, this Fibonacci. It's a pretty key level, right? And if we stay below this fib, I think that this is going to be a clue and give us some context into whether or not commodities can continue and go back to outperforming the S&P 500. Now, this is USO. This is pretty zoomed out. This is a weekly time frame. Okay. We're looking for the breakout here on USO to buy some energy stocks. And we went ahead and did that. And it came up here, and it's not a coincidence that we've had a rally. The market in general got overextended. And what are we doing? Well, we're getting rejected at old resistance, at old overhead supply. Now, do I think that this is, something that's going to turn into a double top? Not necessarily, right? A double top would be something like this, and it would have to break this neckline here of roughly $64. Now, what this is just testing resistance, right? We established it over here. We're testing it again over here, and I'm looking to see if this potentially forms into a cup and handle. Okay, now again, you can look to buy support in some of these areas, and however your risk management works, or you can look to see, hey, maybe do we get that cup and handle, and then you can look to buy the breakout basically above 83, and then your next target up above is going to be 95, right? So lots of room to run there, if oil can truly break out. And you got to ask yourself the question, what's really going to be happening to the stock market, to equities in your portfolio if oil ends up going up to $95, right? It's a 90, 95, 100, and even above 100. That's most likely going to cause pain in the market, right? It doesn't have to. There are plenty of times where energy and the stock market go up together, but you do want to consider that, right? And we got Larry Tentinarelli here talking about XLE finally pulling back after a very strong breakout. Lots of charts in the sector look to be buyable on any standard pullbacks. That's enough about energy. We're going to talk about precious metals here, right? And we're not going to dive. I've done plenty of videos on specific metals. We've, gold videos, silver videos. We've taken a look at pretty much copper, everything. So what we're going to do is really just take a look at a precious metals ETF. This is Glitter, GLTR. And here above 105.30, we're going to be targeting 120, right? This is another one here. Huge, huge, huge. I mean, this is basically like a decade-long base that we're forming here, bottoming pattern with this cup and handle. And 105 is really that threshold. If we can get above that 105, it looks great for a potential move up to 120. Now, of course, this is a huge pattern, huge in the sense of time. And so it's going to take lots of time for this, I think, to break out to the 120. It doesn't have to, okay? It could just continue this massive move to the upside. You see, it just went from, $86 up to 105, almost in a straight line, it seems, right? With the massive move that we've seen in metals. firing off that inverse head and shoulder that it had on these smaller time frames here, right? You can see that broke through that neckline and just absolutely skyrocketed. So this is one that I'm watching, right? And you know, keeping a close eye on for any potential opportunities here. Metals just continue to look really strong. This is lithium lit. All right, this is a monthly time frame here. And I believe this was from Bertinelli, James Bertinelli. And he was basically just saying that, you know, price corrected the same amount and in price and in time, right? So we have a double correction here, right? And now we're seeing that same exact correction in price and that same exact correction in time. He thinks that it's bottoming out. This is one that we've been paying attention to, but it rolled over here recently, so it lost my attention, right? We initially had a little bit of a breakout on the smaller time frames, such as the daily chart, but it ended up rolling over. And so this is a log chart that he uses, I believe. And so what I've done here is I've kind of just put my own spin on it. And, you know, I want to see this whole time cycle thing, right? Because what I noticed is that there is potentially a little bit of truth to this, right? See, we bottomed out right here on the time cycle, and then we bottomed out here again on the time cycle. And if we were to bottom out here again on the time cycle, right? Basically just saying that, hey, maybe this has a little bit more time to go, right? His analysis basically shows it bottoming out already, okay? But I'm open to the possibility, especially after the, you know, some of the recent price action, that, hey, maybe we consolidate here a little bit, right? Maybe it doesn't have to create a new lower low or something like that, but maybe we consolidate, move sideways a little bit here. And the bottom is going to be closer towards the end of the year. This is right around September, October, November timeframe. So basically Q4 of 2024 is potentially when we can see the real bottom in lithium, by my own time cycle and time analysis. But even here, it still offers a generally good risk to reward ratio. Okay. If you're entering in right around 42.50, I think you want to put a stop below 35.80. So let's just call that $6-7, right? And then you're targeting, your first target is going to be $61. Um, so I mean, that's about almost you know, close to a 3-to-1 risk to reward ratio. Not exactly, but over a 2-to-1 risk reward ratio. And again, being that this is a monthly time frame, you need to have a longer time horizon. This isn't something you would want to be buying call options that expire next week on or something, for instance. Now, one of the main reasons I've been focusing on commodities and really thinking that the Fed is not going to cut rates is because of inflation. Okay. Inflation is the prices of things going higher, right? It's just that simple. And what are commodities, right? And what are all these commodity stocks we're trading? They're actually components of CPI. And if the price of all of those are going up, well, that's literally inflation. It's just that simple. So in DBC, we have red here, and then CPI we have in white. And the reason that I'm highlighting this to you guys is because CPI is a lagging indicator, okay? Meaning that it reports on last month's data. So being that it's a little bit of a, you know, a lagging indicator, what I wanted to show you guys was, you know, we see the commodities index top out here, right? So the commodities index tops out over here. And then when do we see CPI top out? Shortly afterwards. And then CPI begins its little bit of a downtrend that the commodities had already started, right? Same thing over here. Commodities top out over here. And then we see CPI top over here and fall off a cliff, just as the commodities had fallen off a cliff, right? This is very common to see, right? And what do we see over here? Commodities topped out, and then shortly after, inflation topped out over here. So if this starts to break out, right, and you can see this is a little bit of a double bottom. If we were to break out of this neckline, something like this, you know, that could really cause inflation to turn around here and really start ramping up again. And the Fed's not going to cut rates unless something is broken in the market or in the economy, just because inflation is going back up again, right? I mean, they're going to, you know, maybe even consider hiking one more time. And I know that sounds crazy, but what I want to, you know, show you guys now is take a look at where we're at when it comes to the financial conditions, okay? These were the financial conditions, this zone right here, before the Fed started even hiking rates. Okay, look at the dates down here. This is January, November, December. This is early This is 2 years ago, guys. Okay. And we are exactly halfway in between that zone right now. So all of the damage that was done to the stock market because the Fed was started raising rates, okay, has been wiped away. We've actually made new highs in the stock market, and financial conditions are actually just as loose as they were before the Fed even started doing its job, really focusing on tightening conditions. And so to, wrap all of this up nicely, maybe you don't necessarily want to trade commodities or trade energy or things like that, but you do want to monitor them and the effects that they can have on the market, right? And maybe it's a good way for you to keep a track on and help adjust your portfolio based on certain inflation expectations. Or maybe it could be potentially a good hedge, right? Maybe you have a lot of exposure to tech stocks, right? And if you do, naturally, if you own the S&P 500 or the NASDAQ, you have a lot of exposure to tech stocks due to their large market cap, heavy weighting. But maybe some of these commodities or maybe some of these energy plays could be a good potential hedge for you, just in case they continue rising and inflation continues to rise, and the market starts to, go from pricing in rate cuts to potentially even rate hikes, right? And then we could see a lot of valuations in the tech industries, small caps, and other places. We could see a lot of those valuations come down, and that could hurt the stock market potentially. So, you know, yeah, there's opportunities to go long some of these names, but you don't have to do that. We're not like cheering for commodities to break out and for energy to break out and go to 95, 100, or go to 120. That's not exactly what we're looking for, but we are preparing ourselves for the possibility of that, right? And at the end of the day, investing is really about risk management, and I think that this is one of the risks. That you really want to pay attention to, right? It was something that we were spotting in March, bringing to y'all's attention in March, and now we're starting to see them roll over a little bit, right? And if they can continue to roll over, then that's going to ease some of the pressures on inflation. But if those things start to turn back up, just remember that that's the price of commodities going higher, and those are, inflationary. That is inflationary. So that'll wrap up today's video. If you enjoyed it, you want access to the Discord so you can see all my analysis, as well as custom scripts, indicators, other valuable resources. The link is in the description. It's $10 a month. And you can also check out the newsletter. Okay, the newsletter is completely free. Check out the website if you enjoy it, or you like what some of the articles are about. Then go ahead and sign up. All right, on the website there, subscribe to it, and you'll get those emailed directly to your inbox. And you can always check out my Ko-Fi page if you ever want to do a one-on-one session. You basically just come here, click on the commissions tab. I do those all the time. And you can book a 30-minute or a 1-hour session. You can also click on this little buy a coffee button, basically a way to leave a tip or donation for all the free valuable content I put out, such as these videos and the newsletter. And if you made it this far, make sure to subscribe. Okay, like the video, and if you like this one, most likely you're going to enjoy this next video here too as well. So be sure to click on that one.